Ladies and gentlemen of the crypto space, we're live on a Friday, February 11th at 11:33 a.m. All right, fine. It's a clickbait headline. We're going to talk about some really awesome, exciting, game-changing cryptocurrencies that make everything new and different and exciting. Yeah, you'll see. We're going to talk about them. You guys know the deal. You guys know my content, and you know where our focus is. And we're going to evaluate the crap out of the risk curve. But I do actually have something that's interesting. A new site called CoinDix, which is pretty cool. I actually, it's rare that I see like a yield aggregator that presents everything, the entire holistic top-down view of the ecosystem in a useful way. So it's missing one thing. It's missing the one position that I've opted for my stablecoins, which is quite interesting. I wonder what that means. It's an interesting thing to talk about. Why I've leaned into KeyDAO and the stablecoin, which is it has very interesting properties as compared to our previous engagement with MIM. And we're not talking about the complexities, the PR complexities, so on and so forth. But MIM does have unlimited cross-chain liquidity, as it was integrated into multi-chain from an Ethereum standpoint, and it has all its liquidity on Ethereum, which basically means it uses the bridge rather than the router. So it has a deposit on Ethereum and a tokenized representation mint on the various networks, and that was crafted well. Mai has a very different implementation. Let's pop it over to the main screen, and I could show you what I'm talking about. If we go over to multi-chain, you'll see in the pool section. You'll see MIM was generated with all the liquidity on Ethereum and the tokenized representation using unlimited. Whenever you see unlimited here, it means it's a deposit on Ethereum and a mint of representation on the corresponding chain. But check it out. This is something I found quite interesting. So MIM was massive, and Daniel is a gigabrain with regard to community building, so on and so forth. He did incredible things. There's no discredit there in any regard, but take a peek at the amount of chains that it was deployed on, and then you take a look at Mai. So clearly it's Phantom native, and it's not using the bridge, it's using the router with native coins. When you see pooled assets on the corresponding chains, it means on those corresponding chains collateral was provided to the KeyDAO vault to create the Mai on that chain. So this is quite interesting. It clearly has more chains. It has more scale and scope as compared to MIM, and that's quite interesting. Um, Many more networks, and it's used. There's millions of dollars, and I know that's small relative to the $1 billion. Eight, nine figures of other protocols, but it's also a $15 million market cap, give or take, with a $250 million FDV, full of diluted value, and it's a CDP. It's a collateralized debt position stablecoin, which is a euro dollar. This is the euro dollars of the crypto space. Anything that's a CDP, and there's really only three CDPs. You got Abracadabra, you have KeyDAO, and you got the OG 2017 OG MakerDAO. And of the three, clearly the smallest is KeyDAO, but what caught my eye and why I've allocated the position size I have is the Mashinsky relationship, and that is big. I really like Celsius, and I'm tempted at times to reallocate stablecoins to Celsius because then it's on the books. Literally, you get your tax documents, you get your yield, and it's very clean cut. Um, Rather than the murky waters of the DeFi space. And you get about 8.5%. You can put it into GUSD, which is obviously 1-to-1 with US dollars in a Gemini controlled bank account. So it's reliable in that regard. And again, 8.5%. So that's meaningful. But in the DeFi space, when you crank out like 20%. You go over to my finance, and it's cranking out 20%. So this is not represented 19.1% given the current price of $1.25 after the exploit the other day, driving it down to 20 cents. The price recovery on Key is absolutely fantastic. But you see it's at 19 and change percent, but it's not depicted here. It's a bit of an off the radar position with just a very strong narrative at play with the Celsius relationship. So that's what's caught my fancy. Now, it's a rational position size, meaning I have, it's a large number relative to zero, but it's like $200,000 worth of Key, give or take, which is about 0.6%, 0.6% of currently locked Key. I wouldn't mind getting that up to 1%. That would be pretty interesting. I'd have to deploy, I think, another $75,000, give or take, based on some just, napkin math calculations. But a good part of all my capital is literally just farming stablecoins. It's a large position, about 1.27 mil. At 19%, which is cranking out what, $190,000, $200,000 a year, denominated in an asymmetrically volatile asset that itself cranks out 111% as depicted here. But I think it's more so, this is a complicated value. If you look into the semantics of the info definition, it's over the average lock period. So the lock period ranges from 1 to 4 years, and if you look over here, the average lock period is 2.58 years. So this LPY is 111% for 2.58 years. So calculator, if you do 111 divided by 2.58, talking about 43% APR. So it's not compounding. So 43%. I'm not complaining. So 43%, and I got a 4-year lock. Very nice. This is one of my most interesting positions because it really hits home on the stablecoin narrative that I talk about all the time. You guys know my opinion. I think stablecoins are by far the biggest thing in the entire crypto space because they literally tie into the narrative of the macro financial system and the fact that Eurodollars are failing at supplying least consistent levels of growth. There is a decreasing rate of Eurodollar creation. So if you combine the disinflation of the dollar and the disinflation of the Eurodollar, you have a disinflationary macro currency system. So we talked yesterday, I think, or maybe it was the day before, about what the heck inflation means. So if you want to look back at that video, that'll help break down what the heck inflation is, because we are in a disinflationary money supply system. We're in an inflationary consumer price system. We're probably in, we had a deflationary shock to supply chains. We're probably in, so the word is relative. That's the whole point. You can look back at that video and take a peek at that. Let's answer some questions, and I want to look back at the stablecoin returns. They're quite interesting nowadays, specifically considering the macroeconomic situation where we're in a financial shit show, and it's literally getting to like crunch time, and you got futures screaming for 7 rate hikes, and you got me rambling on, almost borderline belligerent on Twitter, saying they're all out of their frickin' minds, and if they hike rates, they're going to drive inflation through the roof. And I don't know why. I got no one fighting me on Twitter about it. I got actually some macro folks that are like, huh, he's making a point. So who the hell am I? I'm this little guy that just peers through the madness. Now we'll see. In the end, you can have all these theories and hypotheses, and we could speculate, but the charts tell us, the data tells us. And, I can't account for humanity or the insanity that may manifest at the Fed with whatever policy they come up with. But I know what the bond market looks like. I know what consumer sentiment looks like. I know what CPI looks like. I know what the supply chain looks like. And it's screwed because you got geopolitical uncertainty all over the place. Supply chains are shot. You got this insanity going on over in Ukraine, which It's a very interesting story unto itself, but I'm not going to get into geopolitics to that degree. But suffice it to say, the dollar's up. What does that mean? Let's take a look at the dollar real quick. This is quite interesting. So the dollar, if it gets above that green line, that's a heck of a previous resistance, as you can see here. So about 97,787, and it's off to the races. We're a little bit away from a golden cross, a 50 SMA, 200 SMA golden cross, and it's such a extraordinary economic crossroads. I mean, we're literally coming off a bearish engulfing on the weekly with the follow-up holding support on the 200 SMA. I mean, when you have like a bearish engulfing or like an inverted hammer or something that's indicating trend direction reversal, you need a follow-up candle. So clearly we're waiting for this week. We have about, oh shit, it's Friday. 7 hours and 15 minutes left on the week. This is actually interesting. We need another follow-up candle because obviously you have a bearish engulfing and you have weakness in the follow-up candle. So if you see further weakness, that'll give more. It'll mean what would be interesting to see is the 50 SMA brushing it. Oh, and it's rejected. The golden cross getting rejected. We'll see. Lewis, I have to answer some questions, guys. I got to help you guys out too, instead of just speaking my mind all the time. Thoughts on Polkadot insofar as when they will begin generating significant revenue. So Polkadot is Ethereum, is Avalanche, is Phantom. Great. A Polkadot position, we've had that thing for a long time. That's great, groovy, and grand. I remember buying Polkadot before the 100 to 1 reverse split. So that was an interesting time. I take Polkadot merely as a legacy asset. The same with Cosmos. Otherwise, I'm not too much into the platform assets. Protocol is like the tokens, but the platforms are like Ethereum, Phantom, AVAX, so on and so forth. So I'm not too much into them, but I have the Polkadot position as a legacy position as well as Atom. They print. Polkadot just gives you, when you delegate to a validator or whatever the nomenclature is, it's giving you daily yield, daily returns, which is pretty cool. So make sure you delegate. You delegate right in Ledger Live. And it's right in Ledger Live. So it's not like you're stepping out of the box to a portal or interacting with DeFi. You have the implementation nicely packaged into the Ledger Live implementation, which is really cool. So Astar on Polkadot's picking up steam. I think it had a $500 million worth of liquidity the last time I checked. So what's the future of that? It's the same thing as Phantom. It's the same thing as Avalanche. It's the same thing as Harmony. It's the same thing as what Elrond's going to do, or maybe Cardano inevitably at some point. Liquidity is going to flow into the system, and it's going to be filled with all sorts of monetary velocity and capital expansion systems like CDPs and money markets and all that shit. Because if you can build it, they're going to build it, and it's going to get used. And you're going to have a robust, rich environment of various sovereign crypto networks. Maybe that's something that's coming to mind as a narrative. Sovereigns have their currency systems. These networks have their currency systems. Is there really that much of a difference in many regards, at least metaphorically? Joe, when will there be near record levels of bankruptcy filings according to your macro analysis? If the Fed fucks up their policy, if the Fed, if Boller's 1%, 100 basis point rate hike goes into play, it's going to crush enterprise and it's just going to implode. So, I mean, literally, I don't like to think about the equity markets too much because it's kind of it's affected by knock-on effects. It's the bond market. So the bond market tells the story. So the bond market, the yield curve is basically pancake flat. And the 10-year, still going up. I can't believe it was at 2.1 and change, but it's at 2.052%, which is extraordinary because of the 10 SMA, which is a 10 on the yearly, that's a 10-year average line. So this is a very powerful trend line. And if you look at it, how many times in history do you have a green candle above the 10 SMA? One? Maybe. Not really. Two? Three. So let's say 3, maybe 4, depending if you consider this a wick. The yearly didn't close above the 10 SMA, and that was '06, which led into '08. I don't know, but I don't know how much to look into that. But it's about 3, and we're talking about 40 years. In the last 40 years, yield on the 10-year has gone above the yearly 10 SMA 4 times. This is some serious shit. The Fed is in a jam of all jams because anything above this 10 SMA is going to start macro folks that actually look at the data screaming that they're probably making a policy mistake. And the policy mistake there is probably with regard to QE. If this yield goes high enough, it's going to approach debt servicing limits, meaning the government's a business. They only make a certain amount of tax receipts. They only take in a certain amount of money, and they need to pay for Social Security. They need to pay for the military. They need to pay for Medicaid, Medicare. They need to pay for the bonds, the debt on the government bonds, or the interest on the bonds. And if the rates go too high, ooh, they got a lot of capex, and that's not so good. So if it goes high enough, the Fed's going to have to step in to stabilize the bond market and reduce yields. There goes the balance sheet. Balance sheet starts ripping. You know what's going to happen to equities markets. Equities markets start ripping. That affects capital flow. That affects forex markets because now all of a sudden the system goes risk on, and capital liquidity drains, dollars dry up, and they pile into assets, risk assets. So that's the thing, and that's the whole point. Like Joe, it's complicated. It's all connected, and everything has a relationship. And the big hot topic is inflation, but I think they're all full of shit. They have no idea. Either they entirely understand what they're talking about and are saying the most ridiculous headlines, or they literally have no idea what the hell they're talking about because it's a supply chain disruption. And that's exactly what the White House has said. I think they were very spot on in that regard. And the only way you resolve supply, you increase supply to meet demand, is you actually manufacture more shit. The manufacturing, the supply chain needs to grow and expand. And where's the supply chain? It's not here. It's overseas in foreign fiat. So what happens if they raise rates? The juice is the dollar. When you raise rates, capital exits risk assets, it floods into dollars, and there you go. The dollar's off to the races, and the dollar goes up in value. It crushes the value, or at least the purchasing power of foreign fiat, and that's going to put a suppressive effect on the capacity of foreign nations to repair and build out supply chain. They're going to raise rates. It's going to crush foreign fiat, and it's going to juice inflation, or at least it's not going to be in directional. It's not going to directionally support the repair of inflation or the recovery. It's not going to relieve inflation. It's at best not going to make it worse. At worst, it's going to make it frickin' worse. I mean, it's staring at us right in the charts. I mean, yeah, fine. So increasing. So it's a double-edged sword because you increase the Fed funds rate, you collapse the markets, and that destroys demand. So you cure demand side, so there's no demand against supply. It doesn't matter. So that alleviates the inflationary tendency of prices. But if the markets don't just enter a bear market, if they collapse, if they crash, there goes the tax receipts. Now all of a sudden you have a sovereign debt crisis because you can't pay the interest on the debt because you just collapsed the stock market. You got all these zombie companies. Like 20% of all companies are zombie companies where their income does not exceed their debt obligations. I mean, literally, it's the ultimate catch-22. If you raise rates, you fix inflation by causing austerity and collapsing debt risk markets, and but then you destroy your tax receipts. And when you're right on the line where you barely have enough tax receipts to service your nation's debt obligations, you can't do that. Oh. Anyway, so that's been the hot topic in my macro thoughts. I've been talking about it on Twitter. I'm interested to see how it plays out. I don't think they could raise rates, and I think they got to maybe even decrease rates if they want to cure inflation. And I think they need to likely step into the bond market at some point, which will be a complete U-turn on the QE talk, the QT talk, and they're going to have to juice QE again to drain liquidity from the markets. Oh, this title is even better than the last, Dan. I know. I mean, we're talking about some hot shit to buy right here. We're talking about bonds. We're talking about dollars. Talking about euro dollars. Talking about stable coins. This is a hot title. This is some shit that changes lives right here. I mean, we're talking about 20% returns on shit that doesn't go up and down in value like insanely. I mean, seriously, this is a cool website. This CoinDix is really cool. I mean, so UST, great groovy grad, pop it on Anchor, again, 20% return on your cash. I don't know, but the problem is it's cash yield on cash. Now, cash yield on cash is cool, but that's not going to grow. It's going to grow at a rate of 20%. So if you have like $1 million, you get about 200 grand a year, which is nice, and that's outpacing consumer price inflation. So that's fine and dandy. But some folks want to make money. I have obviously the mill on my finance, but I could have easily opted for like an Anchor to get 20% in cash, but I don't want that. I'm an engineer. I'm a technologist. I understand macro. I understand the significance of a CDP stablecoin and how it is a eurodollar. It's by definition exactly what the hell a eurodollar is. So I don't need anyone to tell me otherwise. It is what it is. They built eurodollars in smart contracts, and I mean the directionality of CDP stablecoins is massive. So the yield here is printed in key. So this gives me the potential for asymmetric growth on a dollar denominated position. Talking about 18%, 18.7%, obviously variable rate, floating rate returns with yields at about, what was it, 47% we said on the key close. I think it was 47% on the boost. This translates to about 40% APR. So that's my sentiment there. Now maybe that's too much. So the risk curve. Maybe that's too much risk. Maybe you don't want exposure to those protocols because you have exposure to the key smart contracts as well as the curve smart contracts. So maybe this is even something that's palatable from a risk perspective. Curve. DAI, USDC, USDT, you're just exposed to the curve contracts, which is literally industry standard at this point. They have the most trust in the entire system. It's the most risk minimized, AMM in all regards. Or, you could throw, but look at the yield, it's 0.6%. Or you could throw, let's sort by APY. Yeah, but let's single stake, no impermanent stablecoins. Oh, there's the ProtoFi. I've been hearing about ProtoFi. My DAI at 56%, but this is a relatively new protocol. And you know damn well this APY is going to get diluted really quick. And it's not APY because I doubt it's compounded. I'd have to look at it, but the odds are that's APR where you have a claim button. So they clearly got that wrong with regard to the presentation of how that unit is measured. Sir Joe's in the house. Crypto Bets is in the house. What should I buy? Just kidding. You guys know the drill. We've been talking about this topic for a long time. What to buy? What to buy? Watch the portfolio balance. New people should be stable coins. And you take those 1% bets on risk assets because 1% bets turn to 10%. It changes everything. And this is not a bull market. This is a bear market. Any rally is a bear market rally. It will gets slammed into resistance. It's going to hit those stops. It's going to fall back down. You see it all over the charts. Let's take a look at some charts. You'll see the bear market rallies all over the place. Hello. Here was a sweet bear market rally right into resistance. Sweet bear market rally right into the resistance of the 50 SMA, the 100 SMA with the 50 SMA cross here. And unfortunately, curve slammed into resistance on the 200 SMA this time. So the last bear market we had, it broke the 200 SMA to hit that resistance on the shorter time frame moving averages, and actually found support on the 200 SMA. This time, thus far, it has failed the 200 SMA as or held the 200 SMA as resistance, also failing the daily TWAP. Let's zoom out a little bit because we all know how much we love curve. So we got the 50 SMA. So we're in a crossroads, just like we are in macroeconomic conditions. Thus far, what do you see on the weekly? What do you guys see on the weekly? You tell me what you see. All right, fine. I'll tell you what I see. You got the most ridiculous price action zone of congestion. You got support thus far on the 50 SMA on the weekly. 1, 2 weeks of support with 2 days left to print a third week of support, albeit this is coming off an uptrend, a short-term bear market rally. This is a shooting star, so you have to wait for the follow-up candle and see if it holds above the 50 SMA. What you want to see is a bit of invalidation of the shooting star. You want to push for a bullish engulfing. You want to push into the TWAP, which is right here, into resistance. You want to see it. All right, fine. It hits resistance. It falls back down, but you want to see this 50 SMA hold that support and eventually break through the TWAP and flip resistance into support, and that'll be nice directionality. So far, it looks as good as we've always talked about it. I mean, it's holding up extremely well on the 50 SMA, considering the fact that it's a damn bear market, and the Fed is no idea who the hell is saying the wrong talking points, because the talking points are literally all over the place. 1% raises, 100 basis points, 50 basis point hikes. You got the futures markets absolutely insane, pricing in 7 rate hikes. They have no idea what they're doing. They have no idea. They're treating it like it's the 1970s where there's a domestic supply chain. They don't get it. Maybe these boys pricing in the rate hikes, they see the CPI, and maybe these boys have no idea what the heck the bond market is. They have no idea how it operates, because the bond market tells a completely different story. This bond market screams of QE. Unless I'm absolutely, completely off base, just what it is. If the yields go too high, how do you pay it? How do you pay the yields? The Fed's going to have to buy the shit to drop the yields so the tax receipts can actually pay the yields. I mean, that's just literally like basic mathematics. That's like a rudimentary corporate balance sheet right there. The bad guy, 48 watching, only 10 likes. We can do better. Yeah, we're a little bit better now. 78 people in the stream, 23 likes. We can do better. Bensei, my man, always a pleasure. Kuala Lumpur, I love this planet. I got such great people that come on the stream, and I'm proud and honored that I could talk to all of you and help all of you guys. It makes a little bit of happiness throughout the day. No horns, no tail. We love Key. What are we, the Kimps? All right, fine. I'm a Kemp at this point. That's just what it is. They need to bring rates negative. I think they do. I think they need to drop rates negative. Why? Because they need to crush the dollar. If they crush the dollar with negative rates, they're going to increase the value of foreign fiat. Stronger foreign fiat gives it better purchasing power on international markets and forex markets, and that'll give foreign countries, foreign supply chain countries, a better capacity to repair and grow the supply chain, of which that's our entire supply chain. There is no supply chain in America. It's completely outside the country. We have no control over the supply chain. There's no domestic supply chain. They need to crush the dollar if they want to cure inflation. So obvious. Cheers, Hilda's in the house. Always a pleasure. Sakio, hello, Captain. Finally got you live. Thanks for all the insights and knowledge. You turned me into an incoomer. We are all incoomers, and we watch the risk curve, and we have structured portfolios, and we're protective, and we apply risk on when appropriate in proper position size. We do what the crypto space does not do. We attack crypto from a macro financial perspective, or at least consider it of macro financial conditions. We attack this stuff like pros, because this isn't a game. These are serious products that have analogs and legacy finance, that have monetary policy that is so much more advanced than any sovereign country central bank has ever done in the history of economics. It's a powerful stuff we're playing with here. And these are very smart software engineers that are coding these contracts, of which I find quite fascinating, a lot of the code. Dylan, Geist is still printing. Sure, be careful with Geist. I'm just going to liquidate that position the second those locks are done. Dylan, no, I have a final interview at a large crypto fund later today. Wish me luck. I wish you the best of luck, my friend. You are very, very instrumental to me being able to build a better knowledge base in the past year. It's an honor, privilege, and it's a pleasure. We're always here, and you know the most rational forum in the crypto space, our Discord server, is always there, and we will always help each other. Sheesh, how much APR are you expecting on VE Multi? No way to know, but I look forward to it. I've recently trimmed my position a little bit to attain a better portfolio structure. Took a fat hit on slippage, but whatever. Structure-wise, sitting on about 20% stables, but 20, 20, 20. Multi sitting at 20, stables 20, fracs 20, convex comes in at about 15. Spell still coming in at about 5.75. I'm comfortable with these. Old school 40-cent VE curve coming in at 3.64%. Good old Keeper at 3.53. Keeper, I think just has a decent time horizon. It's such a systemically meaningful component for smart contract automation, and the fixed forex is just brilliant. Andre's just got a lot of projects on his plate that are just game changing. Like Solidly is going to be ridiculous, and the Solidly tie-in with multi-chain is extraordinary, and fixed forex and come on, and the keepers are just a critical piece of infrastructure. Might as well be oracles. You need automation, like you need data. So it's a big deal. So I don't size it higher because I don't see it as a shorter term narrative. I think it's a very long term narrative. It reminds me of like seamless cross chain liquidity provisioning. It's like I talk about that with like Ring and Popsicle. It's like Q3, Q4 2022, Q1 2023 is when you really want to start checking in to see what's going on because it's going to take some time. It's some complicated stuff. You really need the cross-chain bridges, and you need like layer 0, and you need a lot of stuff, more cross-chain infrastructure to facilitate that seamlessness. So that's a longer time horizon. But whereas, Solidly just launched next week, whatever, Rock's going to launch. So that's going to juice liquidity on Solidly. And the tie-in with seamless cross-chain transactions facilitated by multi-chain. Woo, there's the multi-narrative and the multi and all that shit that everyone's chasing for the NFTs, the yield NFTs. It's a complete red herring. Folks are wasting their time. They're chasing red herrings. They're introducing or exposing themselves to unnecessary volatility. I don't think that is a good course of action. I have none of that shit. People are buying like Iron Bank and that all those DAOs that have like a couple billion. It's just what a waste. And it's excessive exposure to unnecessary volatility and risk. Whereas it all literally reduces to a multiplay. Now, it's important for you guys to understand my mentality. There's no allegiance to assets. I have all this strong conviction in multi, yet last night, I trimmed it because I had too large a position. I had like 65,000 multi at one point. I trimmed it 5. I added the stables. I wanted a larger stable position, not because I fear the markets, because the stable coins are printing cash. That's a cash printer. So I changed, where am I, on Phantom? Oh, my wallet's probably locked. So 20% on stables, it's a no-brainer. Be protective considering the damn macro environment. The macro environment is not forgiving. It'll chew you up and shit you out. So that's a lot of thought that needs to be considered as you're structuring your portfolio rigorously, ferociously, vigorously. This is not, I'm going to buy some crypto asset. No, you're going to structure the shit out of it like a sculptor with some deep due diligence, effort, and ask questions. Ask questions. That's why our forum has been so instrumental to so many people. Ruben, hey Noah, seemed like to be a treasure trove of knowledge, so thank you for sharing. I was researching multi-chain today and also came across Rubik. I saw Rubik, something to keep an eye on, but it doesn't have any. It has a beautiful interface. The cross-chain sounds great. There's something off that throws me off about it. So I saw this. I saw it the other day. The devs look cool. You know, they come. I looked them up on LinkedIn. I looked at their Discord. I did my due diligence. Tokenomics are flawed. There is no tokenomics yet. So everything I saw leads me to just one conclusion: check back. I will look back. I need to see Discord activity because, you know, when you want to look for Discord activity, you look at Andre's Discord. You look at the solid, not Discord, GitHub. When you look at the GitHub activity for Solidity, it's like commit, PR, 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 PR. So you want to see that. So I want to check back on Rubik. I do not. I know many people that take high risk positions. I don't. I have a very conservative portfolio. And you guys know what I always say. I'm not going to outperform. I'm not going to make, 9, 10 figures like a lot of these ridiculous boys, like a Justin Sun type. But I'll be happy in the coming years to grow wealthy slowly. I'll be very happy to have 8 figures in the next 4 years. Maybe 9 figures by 2030, stuff like that. No, not 9 figures. Yeah, eight. Yeah, 9. Okay, maybe 9 figures by 2030. So these are types, this is rational projections of where your current portfolio is sized, where the markets are likely heading, and rational time horizons. Um, that's how you have to set expectations. You could go up an order of magnitude in a couple of years rationally without taking on excessive risk, which carries the potential for losing your damn capital. I know very few people that have taken excessive risk without having a rigorous, market strategy that have been successful. And there's only one that I consider a friend at this point, and I find him and his personality extraordinary. Quite impressed with what I've seen. I think he's a good person, and that's meaningful because there's so many not good people out there. When you find good people, appreciate them, boys and girls. Heirlooms in the house. Happy Super Bowl weekend. Happy Super Bowl weekend, everybody. I wish it the best for everyone. G Shu, RenVM, any insights into what this blockchain is evolving toward in addition to its bridge aspect? I do not. You guys know my sentiment with regard to Ren. There's no point in having Ren. You want Ren VMs. If you opt for a Ren VM, you're going to be exposed to opportunity cost. You're going to be exposed to, a relatively muted revenue stream. But I think it's a good hedge. It's a good hedge with regard to cross-chain solutions. And it's not just a cross-chain solution, so it has a moat as well. So it's a nice position. It's not going to necessarily outperform. Why? Because historically it hasn't outperformed. Historically it has had irrational exuberance, but it hasn't outperformed. But what does it have? It has a massive amount of liquidity. The amount of Bitcoin is like $1 billion on there. It's literally the core of DeFi in many regards. So folks look at Ren and they're like, oh, it's not the leader in cross-chain. But where did all the Bitcoin in crypto space come from? Came from WBTC and Ren BTC. It's a massive, massive historical component of the DeFi space that's not talked about as much as it probably should be. Amir, cheers, Captain. Majority of our positions are tax aware. Let's assume taxation was out of the question. What do you think would be the optimum strategy investing in crypto? Well, it depends on experience, it depends on portfolio size, it depends on age. Those are 3 very critical factors. Like I got family that's retired and they're historically exposed to real estate. And there's no reason for them to get into crypto. They can't handle it. And I tell them, don't worry about crypto. And I'm telling you guys this as a person that owns crypto, not owns it as in like I have crypto. I own the shit out of it. Like I know everything there is to know about it. I own these markets, and I'm telling them, don't bother. You could do just fine in real estate, and you can manage your capital. Because what's most important is to manage your capital. You need to be a professional managing your capital. And if you can't be a professional at managing your capital, you need to have patience and prudence. Otherwise, the market is going to chew you up and shit you out. The crypto space is filled with sharks. Sharks. These whales aren't whales. They're whale-sized sharks. They will trim the crap out of your position faster than you could blink because they got in early, they got a VC position, they provided some initial liquidity. The retail comes in, drives it up 10x, and boom, they drop and turn 100 grand into 5-10 mil in 2 weeks. And that's just what it is. You either understand that that's what they do and that's how you avoid that kind of experience, or you're just part of that experience getting capital taken from you. So that's why I did this stream. That's why I started the stream, so we could do better. We could understand how the wealthy operate. Therefore, we can navigate shark-infested waters, whale-sized shark-infested waters. Jordan, they want more inflation. Well, they need the inflation to melt the debt burden. And what does that mean? That basically means juicing GDP such that there's more income and the debt burden is relatively less, debt to GDP. So they got a complexity. I'm not going to get back into macro right about now, but they got a serious complexity. And you guys know, if you follow me on Twitter, I keep you guys up to date with the shit show that's going on. Amir, for example, a hyperinflated environment entirely unregulated. Well, yeah, that's basically what we have in the crypto space. We're exposed to a hyperinflationary global fiat system. Technically it's disinflationary, and that's another story. You really need to understand macro and understand the implications of how strong the damn disinflation is, and it's crushing on the global economy. Basically, we have periods of short-term hyperinflation, and consumer price inflation just makes it even more complicated the process because I'm talking about global money supply rather than consumer prices. They're only loosely coupled. There's so many layers of complexity in between. So I can't answer how to deploy a portfolio. That's a general statement. As I mentioned, it's completely dependent on age, portfolio size, and knowledge capacity to manage your capital. So I always recommend, if you don't have answers to those three things, you need to start off very prudent and very hesitant. Stablecoins and hedge your shit. So you can't have all your capital in the crypto space. You got to hedge. And how do you hedge? You got to own some shit that you hate. So I hate stocks. Hate equities. I think they're stupid. I think they have negative real rates of return. I think they're literally just meaningless. Zombie companies. But I have a bunch of stocks for my battery metals plays. For lithium, cobalt, nickel, and graphite, time horizon target of 2030. It's a solid play. I just hate the positions. They drive me nuts with opportunity cost, and I hold them because they're hedges. And to really hedge shit, you got to have stuff that you hate, and those are my hated positions. G-Shoe, Frex versus MIM. Cool and cool. That's about it. Don't look into it too much. You could have an entire story to tell about both of them. I think they're powerful pieces of software. Edric, hey Noah, how do you plan on partaking in Solidly? There will be massive FOMO to launch. Getting in early might be difficult. I have no interest in getting in early in anything. I have interest in assessing an opportunity existing and deploying capital to said opportunity. The odds are anything I provide will probably be stablecoin denominated. And if I can get 20, 30, 40% on stablecoins, yeah, boy, now we're talking. So, that's the deal. That's my play. I have no interest in the yield bearing asset. I'll be very interested if the yield I receive from providing liquidity will be denominated not in the stablecoin, but a likely asymmetrically appreciating asset. That's going to be cool. So we'll know more next week. and obviously into the coming weeks as the platform continues to iterate. So I very much look forward to it. But I'm certainly not going to chase around those the NFTs and the protocols that got them. I'm not going to chase shit. Don't chase yield. You chase yield, you're gonna stub your toe. That's a good way to say it. If you chase yield, if you chase gains, if you try and force the portfolio, 99 out of 100 times, you're going to shoot yourself in the foot. You have to get in position before the opportunity. Strategically place yourself in front of the opportunity. Gains have to come to you. If you try and make gains, markets chew you up. No horns, no tail. I heard the negative effect of inflation hit the market 2 years after rate hikes start. What's your view on that? The markets are irrelevant to me. I could care less what the direct implications of policy on equity markets and the crypto space. What I care about is what the bond markets tell me. I care about how the forex markets respond. I care if they make a policy mistake. I care if they don't understand how to fix inflation. And we'll see. Because if they raise rates and equities tank, what does that mean? Because deflation is inflationary. If they raise rates 100 basis points and tank equities and the crypto markets tank, there goes their tax receipts. How are they going to pay the interest on their debt? They're going to freaking have to do a larger bailout than 2020. So deflation is inflationary. And a wise man once said inflation is deflationary, so it goes both ways. If the system implodes, risk assets are going to get juiced through the ceiling. So I don't jump to conclusions. I don't jump to taking positions. I don't fear markets. I respond by rebalancing and adjusting and defining narratives. And I look forward to data points so that I could iterate on my overall thesis of how I view all this shit. So we'll know in the coming days, in the coming weeks, how monetary policy by the Fed, either gets it right or fucks it up. Ryan, hey Cap, Frax looks good as it approaches FPI airdrop. Can you explain how FXS works since it's one of your top positions? I'm not going to get into the nuances of its tokenomics, but let's just say I'm a stablecoin maxi. I believe that stablecoins have the capacity to augment the Eurodollar system and facilitate global currency expansion, which is, or the lack thereof, is the primary cause of global instability and animosity, because the dollar controls everything. And as soon as we could, by creating literally synthetic dollars, we have a capacity to alleviate the animosity on the U.S., and that also alleviates their control. So the dollar weaponization is raising rates, which crushes foreign fiat, which has every country around the world saying, please, U.S., do something. You can't crush us like this. You can't crush our currencies by making the dollar ridiculously strong. So they printed all these trillions of dollars. That doesn't mean shit. If they raise rates, the dollar is going to go through the roof. And that crushes foreign fiat, and that's going to crush the U.S. supply chains, because there is no U.S. supply chain in the U.S. It's all in the countries that are completely dependent on the Fed reducing rates so their currency doesn't get crushed to oblivion. Yeah, the Fed meeting on Monday is meaningful. Yeah, sure. We're going to get information out of it. I'm very curious to see what information we get. Andrew, you're on fire today, Captain. As always, appreciated you and the Rational Squad. We can do better. You know the deal. We think differently around these parts. Raul, hello. One curious view. Have you considered the security models of different cross-chain bridging solutions? Yes, indeed. What I know is we're going to see a bridge be successful, and it will become precedence and entrenched. It will have momentum. It will start creating lendiness and trust the more it is used, much as Curve is basically industry standard at this point. It's accepted as one of the most reliable and trustworthy systems in the entire crypto space. So I look forward to one of our bridges establishing that position. That's the deal. Alex, Noah for Fed chair. Oh goodness, no one in their right mind wants that shit. They are so far dug deep in shit. There's no solution. The only solution is radical policy change, which will probably require congressional intervention or an act of Congress to literally adjust uh, what is money. They and then where is the world heading towards CBDCs? And I don't want to get into that right about now, but I have my understanding of the way the world is heading with regard to CBDCs, and China is really pushing things ahead because they love the capital controls. And what do we do in DeFi? Everything is capital control. So who the hell are we to judge sovereigns' interest in capital controls? But clearly, you get into politics with human rights and privacy, and it gets really complicated the second you get out of the crypto space and talking about CBDCs with regard to sovereigns. One curious view, H2H on Ren should launch soon. Very much looking forward to it. My Q is in the house, Quentin. Yes. Yo, good morning, Captain. Do you ever code in Solidity? I notice you talk about contracts a lot. I have a capacity to code in Solidity. I don't have much experience with Viper. I know how Curve talks about it. I wish I had more time or more patience, and I'm just maybe I give the excuse that I'm older and I have kids and I'd rather just focus on financials. And I've taken real liking to macro financials in the last 2 years. And I've been slowly getting away from hands on coding and focusing my profession more so on architecture, structures, patterns, so on and so forth. And that's something that I appreciate from my job, and what they get out of me is some architecture that's they have 12 years experience in how to structure maintainable, iterable mobile applications. Multi-chain is going to connect to Cosmos. I don't see why it wouldn't, my friend. Assoon's in the house. A pleasure. Trader Z, do you think Curve is a bit overvalued? Overvalued, undervalued is a very misleading word. What matters is technicals and the macroeconomic environment. Not macro like macro financial, but like macro crypto environment. Um, so there's no easy answer to that without digging into technicals and starting to talk about a lot. And I'm not going to get into that at the moment. Dylan, no, what's your thoughts on L2s versus L1s? Oh, yeah. So there will be no Ethereum 2.0. There'll be Ethereum 1.5. They're going to upgrade it to a consensus layer with proof of stake. And my expectation is it will be the epitome of security, which means assets will all be stored on Ethereum. And I think less and less assets will be stored on the L2s and the Alt L1s. And I think with the multi chain world, you're not going to know what chain you're operating on. Everyone will be on Ethereum executing transactions on other chains. I mean, literally, imagine having 1,000 USDC on Ethereum, and you want to buy Ethereum. You execute the transaction on Ethereum. It processes the transaction on Phantom and returns the Ethereum back to the Ethereum network, all with the gas fees of Phantom. So you're not exposed to the gas fees of Ethereum. You're exposed to the gas fees of Phantom. You did the transaction on Phantom, but you got your assets back on Ethereum. Seamless cross-chain interoperability. That's the directionality of the markets that I see. You won't even know that you're doing the transaction on Phantom. You're going to have your assets back on Ethereum, and you're not going to give a shit about Ethereum gas prices anymore. But Ethereum gas prices are going to keep going up. Doesn't matter. You're not going to be using Ethereum for transactions. You're going to be operating on Alt L1s and L2s, storing your transactions on Ethereum mainnet. So that's the directionality of markets. This whole shit about people complaining about gas prices, yeah, it's a pain in the neck now, but that's not the destiny of the markets. But it is the destiny of Ethereum to just have gas prices keep going up and up and up, which is not going to be a burden in the coming years. Paul, hey Noah, greetings from Berlin. It's a pleasure, my friend. Welcome, welcome. Is Spell worth to keep an eye on it? It's worth it to keep an eye on it, especially with regard to tokenomics pivot that's expected. I would be cautious with position size, respective of the portfolio. You know, that's a subjective thing to size a position, but I would be on the more cautious side. The market is fragile. The macro crypto market is bearish. The macroeconomic market is on the verge of singularity in many regards, and There's still a lot of bad sentiment regarding the Wonderland controversy, was carried over to Daniel, was carried over to Abracadabra, which is a tragedy, so on and so forth. But the software is still a CDP, and that's a big deal. So just as you said, it's worth it to keep an eye on it. Mike, I share this channel with everyone I know. You'd have 1 million followers if everyone out there wasn't chasing the overnight million. Let them get wrecked enough. They will come around. Maybe they won't come around. How many people can really understand the words that are coming out of my mouth? I'm Jackie Channing this shit. It is what it is. My wife has always told me, know your audience and cater to them. And I always found that, I always thought of that as like demeaning. I don't want to do that. I'm going to talk sophisticated with depth and richness and complexity. And I'm going to tell you guys a story that you've never heard before, because that is the way my brain works. And it's not for people to not understand me, but it's to give people a challenge and encourage people to do better and give them hope and methodology and ideas that expand the way they look at things, and I help people understand the way I think. I never look. I spend half the damn stream answering questions, and that's my pleasure and privilege that I could answer questions, and that's why I say I talk the way I do, because I will always explain anything I ever say. All anyone ever has to do is ask. Jay Adino, don't forget H2O. Defrost Finance, not really on my radar at the moment, but we'll see what happens. Last couple of questions. What's your view that will happen? Russia-Ukraine dispute and how it could affect crypto economy overall. Right about now, it's some serious shit going on. Let's end on this note because this is complicated. I'm not a professional in foreign affairs, but I know a fair amount. I know human psychology, and man, Putin's speech the other day. This boy is he's well versed. He has a long history. He has experience and knowledge. He's not weak. He's not. He lacks zero. He lacks zero confidence, meaning he is extremely confident. I don't think he expressed himself with arrogance, which was interesting. The times that I've heard him, he's just unnervingly confident, meaning he didn't hesitate to use the language he used. In fact, if in fact, it was impressive from a personality standpoint. What I heard, and folks could take that the way they want to, but he's just a strong person that presented strong words with very clearly and calmly, and that's meaningful. What he said. You guys can watch his videos and see how he talks about his nation's weaponry and so on and so forth. He wants what he wants. He knows how to achieve it. He's versed in political nuance and how to apply leverage. He knows his nation's capabilities. He knows his nation's limitations. He knows the repercussions of Ukraine joining NATO, meaning that means he has to militarize the border. He needs to protect the border against NATO, a NATO country. And I don't think Russia could afford that. So he knows he's painted into a corner as Ukraine sits between Russia and NATO countries. Right now it's a buffer. And I don't think they could afford to militarize the Ukrainian-Russian border. So that's some serious shit. What's going on right now there is a heck of a conundrum that doesn't have a very simple solution. He's in a time box because he's got a lot of troops deployed to the border, and that's expensive. And he needs to achieve a result because the longer it goes on, the more expensive it gets. And this is I don't see a simple resolution to this situation, and I hope it doesn't continue to escalate. It's unnerving because if you thought game, if you really think all this shit through, it looks like it's heading for a head-on collision. Just is what it is. Last question, Avi, is the majority of government debt variable rate or short-term loan? It expires and then they have to reissue debt. If not, would debt servicing largely impacted by short-term interest rate changes? It's not variable rate. Bonds are variable rate in some regard because as bonds sell and buy, the rate goes up and down. So I guess you can say they are variable rate. Let's wrap it up. Friday, February 11th at 12:34 p.m. I wish you all a wonderful weekend. Relax, get away from the computer, structure your damn portfolio so you don't have to be afraid, so you can sleep at night, so you can relax, that it pulls in cash and doesn't have to be all volatile assets. You got stablecoins, so you're chilling out, but you're exposed to good assets, meaningful assets that have great solid narratives that over rational time horizons are going to appreciate, but means you're in a good position to accommodate the insanity of what's going on at the macroeconomic level, and you're protected. So you get to relax. Thank you all for joining. Tell everyone to subscribe. After party on Discord, the most rational community in the entire crypto space. Links in the description and on my Twitter profile. Stop by Twitter, say hi. I will see you next time on Monday. Peace.